Good morning, ladies and gentlemen. Today is April 15th, 2020, and welcome to another live investing systems trading service show. So, I hope everybody's doing okay, and we're going to take a look around the markets and the open trades that we have right now. And I thought we would take a peek at some of the recovery stocks on the recovery watch list. As you know, we've had a pretty significant rally recently, and today is, interestingly enough, today is the first down day we've had in a while. So some really nasty economic numbers came out this morning, and I think that's kind of put a damper on things. And plus, we've had such a significant rally over the last couple of weeks, which I'm going to take a look at now. So there we go. Here's my S&P chart has a lot of lines on it from various levels. Of course, this was well, might as well start with the lines I have on the chart. This one's pretty obvious. This is the big fall rally from last year, and this little dip here, as you recall, was this is when the COVID-19 little started in China, and lots of bad news coming out of China, and the market took a little dip, and then there was there was where it shrugged it off, and then all of a sudden, when it started spreading to other countries, that's when we got that sell off. And the sell off was, you could call it 35%, right? I think that's basically what I think. I measured, like, I think 37% from intraday high to intraday low, but most people are calling it a 35% sell off. But so interestingly enough, and we talked about this last week, we had that little kind of outside of the range pivot low there and reversal. And aside from these three little bars here, and that's kind of an unusual pattern. You don't see that too often. Like sometimes you see like 1 or 2 days, right? If this was like one day, it would be called well, I don't know what it would be called. Oh, by the way, I got a bit of a storm coming through here, so hopefully it's not going to interfere with the show. Although if it starts raining too hard, I may have to take a break and go shut my window. Kind of an unusual little pattern right here with this gap on both sides of these three bars. So that was a little bit of bad news, but for all intents and purposes, we've had a pretty significant rally off of the lows. And of course, you guys know that, and I always say this. I always say I'm not a big Fibonacci guy, and then the next thing I do is draw a fib on there. But it's just kind of interesting because 50% is not really a fib number, right? I mean, it's on all the indicators in that, but it's not an actual Fibonacci number. So, but I mean, a 50% retrace is basically sort of where we are here. And yeah, I guess it's par for the course. It's kind of remarkable, honestly, that the market was able to, because here's the thing is, in my opinion, I mean, today's just like the beginning of the bad economic numbers that are certain to come. And so, earnings season is just now kicking off, and I believe the banks started releasing earnings yesterday, and there's a lot of pieces to the puzzle, right? Like the airlines are getting bailed out. That's been determined, and so I think they're up a little bit today. But basically, we got the 50% retrace, and yesterday was a pretty strong sort of follow through, right? And so it kind of seemed like yesterday that maybe they'd continue with the rally at up to 61.8, right? Which would be, in my opinion, and of course, hey, this was sort of a big resistance point. Let me zoom out on this chart here. This red zone here was that was a lot of support on the way down from these prior lows here, and I pretty much assumed it would be, a fairly significant resistance point on the way up. And yeah, the market kind of, waffled around it, retested it from above, and then yesterday was a strong day. But the most interesting thing about sort of where we are right now is how literally all the big Wall Street firms have come out and said that the lows are in, that the lows are in, um, and I mean the funny thing is like it's been within just the past couple of days that I believe Goldman Sachs came out and said, "Hey, the lows are in." Of course, the markets, rallied 28% off the lows, and so, it would have been a lot bolder call for them to say the lows are in, over here, right, or over here. But they waited until that, and then they proclaim, "Oh, well, the lows are in," and so anyway, that remains to be seen. It would sort of make sense for the market to struggle around here, around the 50% retracement. But I mean, here's the thing: is as far as the eye can see, the economic news is going to continue to deteriorate. As a matter of fact, the first quarter numbers that are coming out just barely even encapsulate um, the March shutdown. So January, February, March, and so I mean things didn't really start to get nasty until, as you can see on the chart. I mean things started getting nasty around mid March, right? And I mean obviously sold down starting at the end of February, but mid March is when things started really getting sort of nasty and everything. I think in my state, in my state, it was they didn't actually announce like the stay at home. They didn't declare the stay at home order until the beginning of April, April 1st, right? Prior to that, there was no actual stay at home order, or don't go out at night, or only go out for essential stuff. And so anyways, I mean, we're here, we are on the 15th, which would normally be tax day, and so we're only halfway into this. And then of course there's all this debate about reopening the economy, yada yada. But anyway, so this would be sort of a logical area for the market to kind of stall out and/or consolidate, maybe pull back to this weekly trend line. Go back and take a look at this uptrend line. Initially, you can see it's drawn all the way from 2016, and I moved it to just under the body of this particular candle here. The reason being that I noticed that the highs, like these couple of weeks, pretty amazing actually, how that trend line and the highs in that initial, I don't know how well you can see that, but 38.2 retracement all kind of converged in that same area. So 38.2 is a Fibonacci number, and for a couple of weeks there, everything converged right at the underside of that trend line and that 38.2 retracement, and then of course extraordinary measures by the Fed and Treasury, who are doing everything they can to prevent this market from going down, basically, and trying to prevent the economy from really going into free fall. So it's going to be interesting to see what happens from here. It would be, to me, it would be sort of, and here's the thing: is that everything gets stretched. Sometimes things get stretched too far in one direction. In my opinion, rallying up to this 61.8% retracement would be getting stretched in the opposite direction, given the environment that we're in and the uncertainty. So the fact that all these big Wall Street firms come out and try and convince everybody that, you know, the more amazing thing is, the Nasdaq. That's pretty amazing. I mean, the Nasdaq 100 extremely strong, and yesterday punched through that 61 point. I mean, so this thing's just after this sell-off at yesterday's close, it was just barely down from the all-time highs, which seems kind of crazy, but it is what it is. A lot of bad news on, and so right now, I mean, everything's sort of company and industry specific, right? Boeing had a lot of bad news past few days. Airline orders canceled and that, and so you can see what a mess that is. I mean, compare Boeing to like Johnson and Johnson. Look at that, Johnson. Oh, by the way, these are the recovery watch list marks I have on the chart. This was the day it was added, and these were the targets. So we'll look at some more of that as we go right, in a little bit here. But I just want to take a gander at the market. So so the Nasdaq 100 has as of yesterday regained 61.8%. The Dow's struggling right at 50%, with a couple of Dow companies, obviously holding it down, and in the S&Ps. So look at that. That's coming. The ATR 14 is, and look where it peaked here, 198 S&P points, and so the day that it peaked at 190, call it 200 S&P points, right? I mean, that's just absolutely extraordinary. And so basically what that meant is that over the last 14 days, the S&P had been trading in like, call it a 5, 6, 7% average daily range, which is just, I mean, think about that. The index trading in like a 5, 6% or even more average daily range. And so typically when the market is, and I've noticed this over the years, that the market's real boring and the ATR's low and everything's dull, and then you get like a big sell off and the ranges expand. Because basically what you're looking at here is just range expansion. So the range expansion got crazy, and quite frankly, on this little rally that we've had here, the range has practically gotten cut in half. So that's something interesting to look at. Anyway, yeah. So a couple of hundred points on the S&P in either direction now is basically just sort of par for the course, right? We've still seen some really big ranges here recently. Now the past few days here, the range is kind of been the smallest that it's been in quite some time. And so, maybe that means that the market is, well, I mean, maybe that means the rally is running out of steam or it's going to consolidate. It's just hard to tell. But this whole zone here, and I'm going to move on here in a second, but, you know, call it 2650 to 2850 seems like a reasonable sort of consolidation zone, and you can see where a lot of what I have drawn on this chart sort of converges right in that area. So it's going to be interesting to see what happens. Seems to me that the market, that after these, there's one leg and a little consolidation, another leg. It seems like the market's sort of ready to consolidate, maybe pull back a little bit here. All right, so moving on, actually, the next thing I wanted to look at was the open trades here. Just added a new open trade in theory today. I'm going to have to look at that to make sure that it triggered. But and we've had a few here. Look at this. Gilead has been open since 318. Actually, let's start at the bottom here and work our way up. So let's look at the oldest ones. And so today's 415. So Gilead, this 5.9 has been open for quite some time, and these two have just triggered within the past couple of days. So let's see what, and we looked at, of course, we looked at Gilead the past couple of weeks here. So interestingly enough, the trailing stop as we speak right now is at 72 here, and you guys remember, like few weeks back. A few weeks back, I drew this. I think I moved it once, but I drew this trend line, kind of just, you know, just sort of guessed. I just grabbed it and just drew a trend line sort of across these lows, and it's kind of interesting to see how that stop, how that, and like today, like basically the stop is kind of, and this trend line could be, I could pull it up a little bit and draw it under this low or whatever, but that stop's been kind of hugging the uptrend line, which is kind of interesting. But so basically, this thing triggered in over here, right? Like, well, this was a trigger price, I should say. Trigger price was, and it had that massive spike up and then back down. It's been kind of all over the place, but in the context of, pretty decent uptrend. And so as of yesterday, it was looking pretty good. But, and they've been in the news a lot. Quite frankly, I'm surprised that it's just kind of hanging, right in the middle of this range here, because they have been in the news. But anyways, so far so good. Uh, I kind of wish that, and of course everything is calculated based on the ranges and ATRs and all that good stuff. But I mean, I kind of wish that this stop was um, kind of wish the stop was just under the trend line, like it was back here. The first couple times this stop went up, it was like clearly underneath that trend line. Now it's kind of like right there. And so if this were to come down and actually tag that trend line, then it looks like the stop's right there. So, but we'll have to see. We'll have to see. I mean, there's a lot of sort of random zigzag ups and downs here. But anyway, so there you go. Gilead still, hey, in the context of the big scheme of things, let me zoom back out here. Um, it was pretty good. It was a pretty good little breakout here, but it just got really super crazy when the market went crazy. And of course, the other thing is that with this wild price action, with these long range days, it kind of triggered. I'm not going to say prematurely, but basically it triggered prematurely. just due to the price action, this swing down and then that swing back up. So anyway, let's move on here to the next one. There's only four open trades here. So here's the 5-9, which triggered on 4-8. So I should probably fix that. There you go. So this day right here, it triggered, basically there's where your trigger is, right there. Closed this day over the trigger price, opened the next day like, basically just right at the trigger price. And so far so good. That stop's pretty tight. This is kind of a volatile stock too. And by the way, I mean, if I zoom out on this chart, I mean, look at this thing. It took a huge dive along with the market when it sold off, but then this latest sort of rally here has taken it up to new highs, which is pretty amazing. And there's quite a few stocks. Amazon's at a new high, so it is what it is. Coming in a little bit today, obviously, with the overall market. So, not a whole lot of risk. Not a whole lot of risk in this one, considering. And let me make sure. Yeah, trailing stop 76.50. So that actually, I should probably move that over one. There we go. Because this trailing stop, I believe, just moved up. Just moved up at the update last night. The target on this thing is $93, right? Which is way, way up here. I hadn't even marked it because, I mean, at this point, I mean, it's off the chart new highs, but there you go. So just mark that real quick as long as I got it that way. That way I got it on the chart for in case it keeps going. So there we have it. Yeah, nice uptrend going here, and as long as it can sort of hang on to it, you notice that this trailing stop is just, it looks like it's just far enough away to allow for, one of a couple bad market days or whatever, but it does seem like it's pretty close. So we'll have to see how that pans out. Yeah, we could get a little bit of a little bit of a retrenchment today, and then, obviously, things are nice little uptrend going here. Today it looks like it's trying to sort of test that, but not a huge big deal unless this turns out to be a pivot high and then you get a big cycle down. But this thing obviously has been exhibiting extreme strength. And so, here's the thing is that tons and tons of stocks right now, move to the next one, tons and tons of stocks have like sort of V-shaped bottoms on them. So, this one's a little crazy too because it just triggered in, that the system detected that as the big pullback, and then it rallied back up, and so there you go. This just triggered in, and so let's see, trailing stop. Yeah, trailing stop's like way down here at the. This is the initial stop, way down at like sort of the bottom of the pattern, and it's a little dicey looking. Again, these V-shaped sort of patterns or whatever, a little bit dicey for swing trading because, and it's just it's a function of the price action. Like these 2 days right here, these 2 days, very unusual, right? I mean, typically you get your big sell-off or whatever, and then you get some consolidation and you rally back up, but the system the system's just looking at this as like, big pullback and then starting to recover. And then you can see the trigger was like just kind of over the highs of this little consolidation area. So these wild price swings that we're seeing in individual stocks are kind of, I won't say giving false signals. I mean, they're still completely viable, but um, to me anyway, when you get wild price swings like that, and like we're seeing, and just the fact that like this was the initial sell off, and then this thing's rallied. I mean, it's sitting up here at new all time highs, right? This is an IPO, so DocuSign. This is a company that allows you to sign legal papers over the internet. So kind of makes sense that it makes sense, honestly, like fundamentally. But with these price swings here, here's the thing: is that this initial stop is provides a lot of leeway. Now this may come up rather quickly, quite honestly, depending on what the price does. But next couple days, it won't surprise me to see that stop, come up to the vicinity of these lows here. So I might as well just put it on here, and that way, and it may take a couple of days. It may take a couple of days for the stop to to find its way up here, but trust me, it will. And so that's pretty much what I expect. The initial stop frequently can start off like near the lows of the whole pattern, and then it typically ratchets up fairly quickly. So anyway, if you wanted to be, if you and so I would expect that by the time that the price could even sell down, that it's going to be up here anyway. But in theory, right under these lows would probably be the best place to actually have the stop. So keep your eye on that over the next few days. This stock could easily retrench a little bit and continue higher. Right. So if you notice this pattern here, like it had sort of this spike high this day right here, and like this little, and it's hard to circle it just right, but this run up and like this little 4 day down move and then another move with the higher high. And so basically, that's what this stop is trying to stay far enough away that we could get another pullback down here, similar type of pullback, not get knocked out, and you know another rally up the higher highs. So anyway, and so this a stop right there, which I'm pretty sure it's going to tighten up, but a stop right there could easily get knocked out on a pullback similar to that last one. So just keep that in mind. I'll just keep that floating there for when the stop does come out. So okay, so today here's the stock that's triggering today. I already marked it on the chart here. JD, all right. I don't know what this line is about, so I'll remove it. But there's another pretty amazing one. JD like pushing right up to the highs here. So trigger price was actually 43.20, and yesterday, for whatever reason, I didn't look at the news, but it gapped over it and closed over it. And quite frankly, it had a gravestone doji, but it is what it is. And so there you go. It really opened relatively close to the trigger price today. Opened 43.88. So, and then, of course, here's the initial stop, basically down here, actually under the low of all this congestion. So, this is another one that it wouldn't surprise me to see this trailing stop like move up tonight. And so typically the trailing stop's going to start off wide, and you don't really sweat that, right? And of course, I've explained it. The reason for it is that suppose all of a sudden today it went into pullback mode and was going to pull all the way back down, into this congestion area. And so the initial stop always starts off wide, and then if the price starts to move, in our favor or move away from the trigger price up, then it'll tighten up really quick. And, this thing could ratchet up, over the next 3 days, all the way up to, all the way up into the 41s or whatever. So, but it's calculated so that initially, if we get triggered in right at the very moment that a down cycle begins, then it's going to be far enough away that we don't just get knocked out right off the bat. So that's sort of the concept behind it, anyway. So, real quick, Jeffrey told me last night the pending trades. There's not much to the. By the way, you can see JD there, on the triggered today list. Not much left in the pending trades. There's two stocks here, but Jeffrey told me last night that he thinks that this pending list is going to start growing from here. So that's pretty good news. And it depends. I mean, if the market's going into a down cycle here, then that's probably. See, the reason that the pending list is so small, and we'll take a look at these here real quick, is that the overall market just had a VIPS. VIPS. Huh, something looks weird with this. Like here's you know what? I think this thing hit a trailing stop or something. So, and I didn't mark it on here. Huh, that's weird. I mean, it looks to me like it's still kind of going on its merry way, but I think what happened was I think might have got knocked out back here. I'll have to check into that because I wasn't really following this one too closely, but this one's still on the pending list here, and the trigger price. Maybe it was over here that it got knocked out. But anyway, it's getting ready to re-trigger over here. So I'll leave this on here until I figure out what's going on, and then I'll adjust everything. So this could potentially trigger in again. And EVBG, this one's actually looking pretty good here. 108.50 is still this same trigger price right here, and we haven't had a close over it yet. And so you can see that, zoom in here as close as I can. 108.50 is going to be right right about there. And so you can see what's happening here. I mean, it's getting really close. Yesterday, poked above it. Um, I think we talked about this over here, and this is a great example of, so we got this pullback here, and then this was actually a pivot low, a 2-2 pivot low. Two higher lows on both sides of the pivot day, but it didn't get any follow through. And then this day, boom, took another leg down. So, but in the bigger scheme of things, this actually looks pretty darn good, right? And so a close, all it's going to take is a close over 108.50 here, and that's a pretty good looking chart, to be honest with you. Out of the ones that we just looked at, this might have the best look of all to it. Although, there's the potential for, when you see the sort of these big down days. So there's always, you always got to consider the potential of like a little fake out. Say it closes, over here, and then tomorrow, boom, another big down day. But the interesting thing is that just sort of the way the system's designed is that you get the close over the trigger price, and then the next morning you only enter as long as it's still over the trigger price. And so, over the past year and a half, we've seen a lot of different things happen. So it's entirely possible that this closes over the trigger price, and then you get up tomorrow morning, it gaps down and tanks, and so you wouldn't actually enter it, right? But if you ask me, this thing kind of looks like kind of looks like it's set up for a rebound, right? So forming like a sort of a cup type pattern here. Anyhow, so that's on the pending list. I'd keep a close eye on the close in this one today. Let's see. So we looked at the pending list, looked at the open trades. So real quick, take a spin around these recovery stocks here. You can see this big list of brand name stocks here, and of course it's got a little bit of everything. A couple of financials, some healthcare, some Dow stocks, energy, Mickey D's, Apple, Starbucks, Microsoft, Facebook, I mean Disney. And so the idea of the recovery watch list was that it was going to be, I'm going to pull this up on my other screen so that we can just sort of look down this list here. Um, well, first of all, let's just look at the SPY and the VIX just for the fun of it. So, because SPY, I don't have anything marked on my chart really. As a matter of fact, I can take that off. So on that table there, the SPY, it's got a date of 326, right? And that's and by the way, like literally every one of these recovery stocks has triggered in, right? So I mean, we kind of rolled it out. We rolled it out like back, right around the time that the market was really selling off, and Jeffrey said, "Hey, he's like, this is overdone. Let's get a list of big brand name stocks that have been around forever and they're not going anywhere. They're not going out of business, and on some indexes and different things, and put together this recovery list because he says that because he said that some of these things are going to recover. And so there you go. So anyways, the SPY, this was the date it was added, and the first target, well, that's interesting. Let's see, the stop he has is 227. So that's gonna be down here. So basically 227.50. I'm gonna mark that on here just because. Stop 227.50. So anyway, if this market rolls back over and retests the lows, obviously, so this is where his system basically is calculated where the stop should be on this current It's a little bit higher than that, on this current rebound. And so some of the individual stocks have rebounded a lot more than the indexes, right? So 299 and 313 are the targets. So let's draw that on here. You know, 299 and 313. So and these are just sort of rough estimates of where it actually is on the chart. But so there you go. Those seem pretty aggressive to me, but it is what it is. Um, SVXY. SVXY. Oh, that's interesting. So apparently the VIX is like kind of held in there a little bit. So let's see, 20 set the targets, Targets 46 and 54. Those are way up here. Wow, that's interesting. Go back to Johnson and Johnson because this is I was looking through this list and this one kind of stood out at me because this is basically sort of the concept of the recovery list, right? Is these big mega cap blue chip stocks get extremely oversold, and then they have they either recover over a period of time or they have like this is quick. This recovery watch list is really sort of designed to be played over weeks and months and longer term, but pretty amazing. So Johnson and Johnson was added back here, right? And it's just continued up, and there's both those targets. So Coke be another interesting one. See, targets 50-50. Came kind of close to that one. 50-50 and 55. Let's mark those on here. So there you go. There's the recovery in Coke. Financials haven't really been so hot. Goldman's on here. 198, 222.50. 198, 222.50. I may go back as time goes on and actually label these. I'm just sort of randomly look at the Dow here. I'm just sort of randomly going down this list and guesstimating where the 248 was his first target on the Dow. That was the first recovery target, and then 270 would be the second recovery target. Interesting. Let's look at a couple of these other ones, and then McDonald's. By the way, so like McDonald's was added on 325. Oops, so that's going to be 325. So that's when this one basically, I guess you call it triggered in or whatever. Is when it was added and then finally triggered. And it's got the price on it. By the way, it's got the price on here too, right? McDonald's. And so this would have been, the trigger price right here. 162.98. So it was basically got that price on there. So anyway, and of course, you can go over these things and look at them and look at the trigger and the stop and the targets and all that. So the stop 134. Let me mark that on here. That's going to be, I guess I could mark these stops with it makes it easier to do something like that. So this is probably, and they're all going to vary a little bit. And if you watch the replays of the past couple shows, you can listen to the methodology that Jeffrey explained. But a lot of this makes sense, and quite frankly, I mean the addition of this recovery stock list, back over here was made a lot of sense, and so we ran with it pretty quick because the timing was just the right time. To be honest with you, so stops at 134. This one's already hit the first target, 180 even, 198.50, second target. It's going to be up here a little bit. So, so I mean, basically, and here's the thing is that at the time, nobody was really talking about, these stocks recovering quickly because the market, was still, everybody was talking about a retest of the lows, right? Like the market had just, the overall market sold off 35%. And then Jeffrey says, "Hey, we need to add this recovery thing in." And I'm like, "What are you crazy? The market's melting down." And amazingly enough, he was right. And so it was kind of, we reached a point of sort of max negative sentiment, and the market, turned around, and we've had a reflexive sort of bounce here, and so there you go. Anyway, McDonald's isn't going anywhere, right? I don't know how much business they're losing or how much they're doing, but let's just look at a few of these other ones real quick. Home Depot's had a little bit of a bounce here. Adobe's had a pretty decent little bounce, and of course Apple, right? Apple'd probably be. This is the last one I'm gonna mark up, and then I'm just gonna. Oh, well, I already have it marked up. That's pretty funny. It makes sense because this is the most widely held and one of the most widely watched stocks on the planet. So here you go on 325. Just basically like a couple of days off of the low is when Apple hit the list, and there was the stop, and there are the targets. And so, yeah, Apple's already made it through target 1 and is headed for target 2. And so there you go. And that's what the recovery watch list is all about. And quite frankly, it's recovered a lot faster than anyone would have guessed when we were back here, talking about this a few weeks ago when these stocks were down near the lows. So there you have it. Anyway, real quick look at the S&P here. Little bit of a pullback today. It's kind of there's a little symmetry to yesterday and today and the prior 2 days. So that's kind of interesting. That's a little bit interesting. That little bit of symmetry. The range is narrowing down a little bit, and things are sort of calming down a little bit. Like um, seems like it anyway. But here's the thing: earnings season. Right at the beginning of earnings season, and so there's going to be a lot of stuff to keep an eye on. So basically, that's what I got for you today. You guys can see everything, all the details and particulars on the inside, and I think things are going to be really interesting going forward. But I wouldn't let your guard down because now that earnings season's starting, and now that just today is the first day that the bad economic news is starting to work its way through the timeline. I think that there's a good possibility that there's another little bit of a retrenchment in the market. I think the warning sign was sort of how it seems like over the past week or so everybody's convinced that, well, and a lot of this on CNBC, everybody calling for the lows being in, and everybody starting to say that the market's looking past, the crisis or whatever. And I just, personally, I don't think that it is. I think that this is still just a sort of a reflexive bounce off of that sell-off. So we'll just have to see what happens. So, hey, anyway, thanks for tuning in. I will see you guys here next week.